San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the tech sector closes the book on the first half of 2018 with some major standouts and disappointments. We will recap the highlights so far and what to expect for the rest. Plus, facial recognition technology is here, but not without its controversies. We will discuss one major issue emerging in the field and debate how this technology should be used. And we take a closer look at Facebook's challenging rollout of new ad rules, why publishers pushed back, and could it have an impact on the social network's revenue? But first to our top story. Chinese smartphone maker Xiaomi raised only $4.7 billion after pricing its Hong Kong IPO at the bottom of the range. The pricing values Xiaomi at about $54 billion, roughly half the initial target. However, it remains the biggest IPO in the region in nearly 2 years. Here to discuss Xiaomi's IPO and how it fits into the global tech landscape, we've got Jim Suva, Managing Director and Senior Analyst at Citigroup. Jim, thanks so much for joining us. So what do you think about the price here?
Well, I think it's very interesting. The smartphone industry, as you know, is highly competitive. In fact, super competitive. In fact, Apple has clearly said they're not interested in market share only. They want profitable market share. And so some of the statistics out there, whether it be a phone made by Xiaomi, Vivo, Oppo, Huawei, a lot of these brands that we may not see up and down the streets in America are growing very fast globally. The question is profitable share growth, and that's really what Apple's focused on. We expect the world to be very competitive in smartphones. You cannot leave your home without it. It's part of your DNA and who you are today.
So do you expect Xiaomi to really stand out or just be one of many?
Well, I think it will draw a lot of media and investor attention of a name that maybe not everybody globally knows about. In Asia, their market share is very strong. In the U.S., you simply don't see them very, very frequently. This, we think, will bring some more attention to it. It will help it stand out. But we do want to importantly note that we believe that Apple has always seen this on the radar screen. Years ago, there were other companies that were supposed to dethrone Apple, and we firmly believe that Apple is a stock that you want to buy and own right now, and there will always be competition. Whether we talk about Xiaomi, Vivo, Oppo, Huawei, all these other brands, there's a lot of competition out there.
And you do have a new note out on iPhone pricing, despite the market saturating, despite the fact that Apple's own iPhone sales are potentially plateauing. You're still optimistic. Why?
We are. One thing is to note that Apple services are really growing. So when you buy a new Apple phone, people are doing in-app purchasing on their games, on their purchases, as well as buying Apple Care.
But services revenue is never going to outpace hardware revenue.
You're correct as far as total amount of the company. Regarding the company's total units, we think that they're going to grow low single digits. Now, importantly, we see the surprise is going to be on the trailing models, the iPhone 7 in India and in China, not so much the iPhone 10 that you and I have here in the U.S.
So talk to me about this $1 trillion market cap goal. Well, it's not a goal for Apple. In fact, Tim Cook told me he doesn't think about it very much. But Apple has been close, and then they've lost a little bit of momentum. Do you see Apple getting there, and when?
Yeah, in fact, we have a $200 target price on it. And so when you think about doing the math behind that, that basically puts you at $1 trillion market cap. And with that, we do think that they'll get there. But it's not going to be next day you wake up and it's there and all of a sudden you should think of the company different. They need to keep innovating. They need to keep coming out with new products. You think about their wireless earbuds that they're doing, the AirPods. Those are doing fantastic and people love them. That type of innovation is continuing. Looking to the second half of this year, we expect them to launch 3 new phones, and we expect those to be pretty well received. And importantly, they're growing in emerging markets. So we do see $1 trillion on the horizon, but we don't think it really changes the story of things.
Meantime, we're in the middle of a very heated trade dispute with China, verging on a trade war. How does that impact Apple? How does that impact the global supply chain? Yeah,
regardless of one's political views, trade wars are terrible for technology and the consumer. Any increases in costs are bad for the consumer. It causes the consumer to pause, to delay, to figure things out. What we've seen in the past, if you look at global pricing, is Apple has put through those higher costs to the consumer. They've not taken their costs lower. We believe trade wars are bad. Now, Apple does have a global supply chain, whether it be in the US, Asia, Taiwan, and lots of areas around the world. They can shift their production as needed. But trade wars are bad for technology and the economy.
So it's been a volatile first half of the year for tech. Is that volatility going to continue in the second half of the year? Is it going to slow down or not because of this political uncertainty?
Actually, we think the volatility is going to continue. The political uncertainty, you wake up every day, something new is changing. We don't think that's going to change. We're at midterm elections that are happening now. We have a lot of uncertainty, and there's also a lot of new, exciting technology trends to come out in the second half of the year, whether it be the car of the future, artificial intelligence, robotics. There's a lot of exciting things coming out in technology. We are not in a mature sector. A lot of innovation is there. With that comes the innovation and the volatility of the winners and the losers.
What about M&A? Disney seems to be close to nabbing Fox's entertainment assets. Comcast still circling the wagon there. But if that happens, will it spark lots of M&A momentum?
We think M&A, given the tax repatriation rules, are going to continue to increase. In fact, we dubbed this year mega M&A for 2018. So we think there's going to be more M&A happening. In fact, you think about looking at Apple, they typically buy several companies. Most of them are private companies because it's simply if somebody has a technology that's better, you can buy them cheaply. Apple has over $200 billion of cash. You know they're returning $100 billion of cash to shareholders. Tim Cook has said that their first priority is to innovate. We think that will happen, but M&A is on the horizon also.
What could they be looking for? This is a company that historically doesn't make big buys. They did buy Beats under Tim Cook for $3 billion plus. But, where do you expect them to be looking?
Your memory's perfect. Spot on. $3 billion was the biggest acquisition they have ever done. We actually think the first thing they're going to do is innovate their products and look into new areas such as content, whether it be streaming video, audio, music, things like that, and getting into your home more. A lot of people don't use Apple TV. A lot of people don't use Apple Music. We think those areas that they're looking into also.
Okay. Jim Suva, Citigroup Managing Director, thank you so much. Exciting year ahead. All right, coming up, AI's race and gender bias, how a new frontier in tech has a big misidentification problem. Next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. SpaceX has successfully launched its 15th resupply mission for NASA to the International Space Station, packed with research equipment, supplies, and hardware. SpaceX has confirmed in a tweet that the Dragon spacecraft is now in good orbit, also reported to be traveling on board a passenger we discussed yesterday, an AI robot developed by IBM and Airbus called Simon. The floating basketball, which has been compared to Alexa, but in space, will be assisting astronauts aboard the International Space Station. So while AI may now be floating in space, here on Earth, there have been more concerning uses of this technology. Yes, it can be used for fun with your voice-activated speaker, for sending out cute emojis to your friends and followers. But when it comes to using facial recognition software, there is a worrying problem. Commercially available software from the likes of Microsoft and IBM is misidentifying darker-skinned females at a higher rate than any other group. According to an MIT study, that group is misidentified as often as 35% of the time, and darker-skinned men, 12% of this time. Still a huge problem. To discuss, we are joined now by Brian Burkeen, CEO of the facial recognition company Kairos, who has encountered this problem with his very own software. He joins us from Miami. Also with me here in the studio, we have Bloomberg's Lizette Chapman, who's been writing about this. for Bloomberg. So, Brian, I want to start with you. You have a fascinating story. As soon as you were getting ready to pitch your own technology, you realized that it didn't work on your own face. What was that like?
Yeah, you can imagine having a software that you build, that you cared for, that you, like a child almost. Imagine your child not knowing who you are. It's kind of how it felt, so unsettling.
So, what did you do about it?
So I was there with another person that I employ. We were pitching a large cruise line. So what we did was we actually had her, she was a white female, sit in front of the machine, let her do facial recognition on her while I stood at the screen. Pretty tough day for me, really.
So, Lizette, you talk to companies like IBM and Microsoft that have the very same problem. What are they doing about it?
That's right, Emily. Well, when the report first came out that highlighted this back in February, the report found that darker-skinned females, they were misidentified as high as 35% of the time. So in the past 4 months, IBM and Microsoft have been working to decrease that, and the way that they've been doing that is by expanding the data sets that they use to train the algorithms. Algorithms can't see what they haven't been taught to see. So what that's meant is increasing the number of brown and black faces along with all of these white ones to do a better job identifying. As of the time that we published, which was earlier this week, the error rates had dropped significantly. For IBM, they were reporting that it was down to about 3.5%, and for Microsoft, it was about 1.9% for dark-skinned females, which is where they found the highest error rates. However, there's a catch.
What's the catch?
The catch is that this is not, these results have not been independently verified, number one. And number two, it's not out in the real world, meaning they're doing, a set of 150 to 150 person match, not 150 people or facial images to the 7 billion people on our Earth or the 1 million in a certain data set of suspects.
Now, there are some real concerns about this technology being used in law enforcement. The LAPD, for example, is already using it. It can be used for good. In Maryland, it was used to identify the shooter in the Capitol Gazette shooting. Brian, what is your take on whether this is really ready for prime time and use by the government?
Yeah, we've been very outward thinking about it's not an appropriate use for facial recognition in the law enforcement space. It's just not there yet. One of our concerns is, as already mentioned, different populations, dark brown folks, black people, are going to be either misidentified, either non-identified or misidentified at a higher rate. So therefore, you're more likely to be said, okay, you're the person that committed that crime if you're black or brown, and that's obviously not acceptable.
Yeah. Brian, is it possible to get to 0% bias?
It is possible. I'm a techie. I'm definitely a glass half full person. And when it is, I think it's an appropriate time to have that conversation. I think that we're still a few years off.
But Lizette, even if we do so, can we still trust it?
There are many people, with the EFF and the ACLU saying that, if you get to a 0%, error rate and it's perfect, even then, what type of society will that be when you can do real-time surveillance and it's 100% accurate according to the algorithm? The burden will then shift to the innocent to prove that they're not who the system says they are. And there have been some concerns recently. For example, Amazon, shareholders and employees put pressure, to stop the use in Orlando of the recognition system. And Orlando Police Department agreed, okay, we're not going to do it. They decided that a couple days ago. It's still being used in Washington County, in Oregon, however.
And there's a huge uproar about that, and we're going to talk about that a little bit later in the show. Brian, if not law enforcement, what are the best uses of this technology, and will it really improve our society?
At Kairos, we decided we're not going to do facial recognition with government, but we are going to do it for business. So when there's a benefit to someone, like unlocking your phone, perfectly reasonable. Making sure it's you when you're doing a banking transaction or a transaction on blockchain like Kairos does, totally reasonable. So where there's some value, some benefit, and there's an awareness on both sides with what's going on, it's completely appropriate.
All right. Kairos, Brian Brackeen, and Bloomberg's Lizette Chapman. Great reporting by you, Lizette, and I know you're going to continue to follow this. We are going to be discussing this controversy around facial recognition software later in the show with Matt Cagle, an attorney at the ACLU, and talk a little bit more about Amazon specifically. Now, coming up, finding a unicorn in China, how VC firms are competing in an ever-crowded market to land the next billion-dollar startup next. This is Bloomberg. In a crowded China VC market dominated by the likes of Baidu, Alibaba, and Tencent, one firm has become one of the fastest growing seed stage funds, Panda Capital. As part of our Venture China series, managing partner Peter Mao spoke with Bloomberg's Tom McKenzie in Shanghai on how he manages to compete with the giants.
Venture business is quite promising in China, and it's growing quite faster, even faster than the US, I think. Recently, we found that there are many companies that started saying that we want global market in the first day. For example, we invested in Hellobike at the very early stage. At that time, the founders told us that we want to put the bike all over the world. So our strategy is that we want to power those young guys who really have the dream or the ambition to be, to change the world, to really make a difference.
The Hellobike investment that you made, that's raised your profile, hasn't it?
Yeah, definitely.
How pleased were you with your investment in Hellobike and the way it turned out? Would you have preferred that the company spend a bit more time growing prior to it being acquired?
We actually expected an IPO for this company. But in the end, the decision is on the company. So we have our opinion on this company, but in the end, we respect the decision of the shareholders, of the funders.
And what return did you make from your Hellobike investment?
It's over 10 times, so in less than 2 years. So we're happy on this, and our LPs are happy.
How competitive is the VC market in China?
It's very, very competitive. It has 10,000 VCs in China, registered VCs in China. And there are a lot of individuals who has money, and they call themselves angel investor. Top 5% of the firm, they earn 95% of the money. So the rest of the firms, they only get 5% of the money. So it's really competitive industry. It's not like real estate. Top 100 guys live nice. It's no, rules we can follow, no routines. So we need to be very innovative. We need to try to stay in the 5%.
A big question on many people's lips is who is going to be the next Baidu or Alibaba or Tencent or potentially Xiaomi at some point when that lists. Who do you think has the potential? Which startups in China are likely to make it big?
Right now, I think Total probably has the best chance. But I think if you ask me this question, eventually, what kind of company can beat the BAT? I think maybe on the social app, they can get large user base quite fast. They're fast enough that then it's no way to copy, right?
Tencent and Alibaba, by far the biggest investors in the startup space in China when it comes to technology in particular. Yeah. How are they shaping the landscape?
I think they feel really anxious about the startups. They're really worried about some innovative companies appears and someday beat them. So that's why they make a lot of investments to make sure that something don't happen. When you worry about that, then something, gonna happen someday, very soon.
That was Panda Capital's Peter Mouse speaking with our own Tom McKenzie. More from our Venture China series now, and a look at China's unicorns. Gowron Capital has already invested in more than 15 startups valued at least $1 billion so far. Founding partner Zhen Xiaodong tells Bloomberg's David Ramley how changing Chinese consumer trends are driving his investment strategy.
There are two main focuses for us. The first is the so-called new consumption. China is currently going through a consumption upgrading, be it e-commerce or retail business. The other area is core technologies such as artificial intelligence. We believe that these technologies will improve facilities, infrastructure, so that they can better fulfill the people's demand of clothing, eating, housing, and transportation.
What's the most dangerous area for a venture capitalist to invest in China today?
For example, one of the models that we don't think that is promising is Haitao. That is buying products from overseas and selling them to domestic consumers. At one time, almost every single VC made investment in this area, but we didn't. We hadn't seen winning difference and core competitiveness in those companies, so we decided to hold our money. Nowadays, a lot of such companies no longer exist. Another example is the self-service goods shelves, who were really popular among investors not long ago. A swarm of VCs have bet their money in those startups. We, however, don't think that model is viable, and now the front runners in this area are struggling.
You led the first round of funding for Pinduoduo, which was worth something like $1.5 billion last year, and now it's worth $15 billion. How does it feel to watch a company grow so quickly in such a short amount of time?
Pinduoduo is still a startup despite the fact that it is growing really well. I will still look at it in a very rational way. It has been there running for 3 years, and it requires longer time for Pinduoduo to continue to develop.
Do you think it can survive competition from Alibaba's Taobao and JD.com?
Of course I believe it can. Otherwise, why would I invest in it?
That was Gowron's Zhang Jun speaking to Bloomberg in Beijing. Coming up, we've gotten complaints. That is the assessment Facebook COO Sheryl Sandberg gave when asked about the company's new ad policy. We'll discuss the bumpy rollout and what it means for the advertising platform. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok, on Twitter. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. The rollout of Facebook's new ad rules have been bumpy, to say the least. Advertisers have experienced delays in posting their promotions in the U.S. as the company implements a broad rule for verifying ads about political issues. This is a crucial part of Facebook's business that's been under criticism from publishers for weeks. For more, I want to bring in Bloomberg Tech's Sarah Fryer. So even Sheryl Sandberg admits it's been bumpy.
She says that there have certainly been delays, and not just for publishers, but for nonprofits, for book authors, for anyone who writes something or wants to promote something about any one of these very broad political issues that Facebook is wanting to put in their ads archive. Now, this archive is going to be this searchable database of political ads that we can go back to for several years, but a lot of these advertisers, especially these smaller ones, have been totally blindsided because they didn't consider what they were doing to be political. These political issues include anything from education to poverty to immigration, and that is a very broad set of things. It's not just candidates who are running for office.
Now, news organizations have been pushing back on these new rules. Is anything changing?
Well, Facebook says that in order to appeal to the news organizations, what they're going to do is divide them from the rest of the political ads in the archive. They don't really want to draw that hard line and say this is news and this isn't, because of course there is a lot of news on Facebook that is slanted or for a particular agenda or something that is masquerading as news that isn't, and they don't want to be the one to say, well, this site is not news, but this site is. It's a very tough call for them to make, so they're defaulting to making everyone go through these rules. But here's the thing, if you want to be verified as a political advertiser on Facebook, you have to not only send in the last 4 of your social, you have to receive a piece of mail from Facebook to a residential address to verify your location. All these things take time, and Sandberg told me yesterday that they're causing delays for advertisers, not so badly that they screw up Facebook's revenue this quarter, nothing meaningful like that, but certainly something that's caused frustration for some of these businesses in the country.
So Facebook has said over and over again it's not going to impact revenue, it's not going to impact engagement, but is it going to impact revenue? Is it going to impact engagement?
I think it's impacted the relationship, and who knows what that's going to do for the revenue over time. She said it wouldn't be a meaningful impact on revenue, so that could be, a smaller impact. The U.S. is Facebook's most lucrative advertising market. It's a market where the average revenue per user is much higher than it is everywhere else in the world. So anything that affects publishers here or small businesses here, this is the testing ground, and this is where it needs to work. Facebook has said they're going to be rolling this kind of ad archive out to other countries in the coming months. So they're going to have to figure out how to smooth this process, though Sandberg says it's a necessary delay.
All right, hang on, because there's another story I want to talk to you about involving Facebook that made a big impact this week. The Washington Post reporting that Facebook and Twitter executives have been holding secret meetings with Trump aides and other conservative leaders as part of a greater effort to bridge the gap between Silicon Valley and those who hold the power in Washington. For more on that, I also want to bring in Naomi Nix in D.C., who covers corporate influence for Bloomberg. Naomi, what exactly do we know about what happened here?
Well, Twitter and Facebook are essentially taking a page out of the typical Washington lobbying shop playbook, which is that they are meeting with their critics. Conservatives have been raising concerns that these social media platforms are biased against conservative voices. And so what we see here in this Washington Post report is that Twitter CEO Jack Dorsey has been meeting with top Trump aides, with commentators that are conservative to essentially, build trust with conservative voices here in Washington.
So, Sarah, what is your take on this? I mean, we saw in the Facebook congressional hearings, lawmakers continually ask about Facebook's bias against conservative views. And, Mark Zuckerberg really pushed back on that. But what do you make of the olive branch?
I think that if we're talking about this, we need to talk about it responsibly. If you look at the newspapers and, the news organizations in general that have benefited from Facebook's algorithm change in January, one of the top beneficiaries has been Fox, right? If you look at what's happened on Facebook's platform, there's no real hard evidence you can point to that conservative content has been suppressed in any way more than liberal content. But this larger fear over what these platforms have in terms of control over what we read and see and hear as we're perusing updates on our friends, that's real. I mean, that's something that these critics are getting at. That's something that these executives want to kind of assuage concerns about, and it's an important part of contending with their increased influence over society. They need to meet with these critics and help them understand how their platforms work. This is not just about Facebook and Twitter. There is a large amount of distrust in the media in society. There was a recent poll that said that 2/3 of people don't believe news they get in social media anymore. Now, I'm all about critical thinking when you're seeing the news, but if it is legitimate news from sort of standard publishers, are we operating in an environment where everyone has a different set of facts, and that could be very much a hindrance to our democracy.
Naomi, it's hard to imagine President Trump leaving Twitter, but do you think there's a concern that he could leave the platform, given that he certainly drives some engagement there?
I don't think that's a realistic possibility. And even if he did leave Twitter, the fact is that a lot of politicians and voices Twitter's have gotten so big that even if he left, I doubt it would have a major impact on the company.
So what's next here, Naomi? In terms of these meetings, do we expect engagement to continue?
Yes. In fact, tech companies have been increasing their lobbying in Washington over the last few years in general, and the Trump election kind of was unexpected for tech companies in Washington at large. And so what I think you'll see is tech companies will increasingly be reaching out to Republicans on the Hill to form those relationships and essentially try to convince them, here's what we're doing to tackle some of the problems that you've raised, whether that is Russian manipulation of our platforms, whether that is sort of the mystery of our algorithms that need more transparency, whether that is the issue of political ads. And they'll continue those conversations with Republicans and Democrats, and to build those relationships in an effort to stop any potential regulation.
All right, Bloomberg's Naomi Nix in Washington and Sarah Fryer here in San Francisco. Thank you both. Well, there has been another shakeup at Twitter. CEO Jack Dorsey's appointed new heads of engineering and product in a bid to bring more, quote, creativity and invention to the organization and better integrate the platform's design and video offerings. Ed Ho previously oversaw both areas but went on leave in May for personal reasons. Former Periscope CEO Kayvon Beykpour becomes the 6th head of product since 2014. It's possibly a sign there will be greater emphasis on video. Mike Montano is promoted to oversee all of engineering, having headed up consumer engineering. Ed Ho had overseen, as I said, both areas. Coming up, AI versus civil liberties. Is new technology infringing on your rights? We will ask the ACLU next. And a quick programming note, remember to tune into the Boston Pops fireworks special this 4th of July. You can watch live in the U.S., 8 p.m. Eastern, right here on Bloomberg Television. Listen on Bloomberg Radio or catch it anywhere on Bloomberg.com. We are continuing our look at the biases in artificial intelligence and the pitfalls that can come from this new technological forefront. As we discussed earlier, facial recognition isn't only gaining notoriety for misidentifying people based on race and gender, it is also being used as a tool by law enforcement and tech companies to track civilians. Now, Maryland authorities say they used facial recognition software to identify the gunman who killed 5 people at an Annapolis newspaper Thursday. But there's also a growing voice speaking out against its use as a tool of surveillance. The ACLU calls Amazon's recognition software that it claims can find 100 people in real time from a single photo powerful and dangerous. That software was being used by the Orlando Police Department until the ACLU revealed it. Orlando PD has stopped using the software since. My next guest revealed the use of recognition by law enforcement in a blog post for the ACLU last month. Matt Cagle is a tech and civil liberties attorney for the ACLU, and he joins us now. So why do you think this is such a problem, Matt?
So people should be able to walk down the street without being watched by the government. Face surveillance technology allows the government to track where we go, what we do, whether we go to a church or an abortion clinic, and that's just not something that the government should be able to do. And again and again and again, when we see governments deploying this technology, they're doing it without rules to prevent abuse.
But what about the argument that this could be a powerful tool for catching criminals or terrorists?
Well, there's a lot of unanswered questions right now about whether this technology actually works reliably. We know that multiple studies have shown this technology is biased against people of color and women. And just this week, a prominent CEO of a facial recognition company came out and said, government shouldn't be using this. This technology is not ready for prime time. So right now, it's really important that there be an informed debate about this technology before we rush forward with something that could be turned against immigrant communities, against protesters, and against activists going about their daily lives.
Okay, but let's say hypothetically, if they work out these issues of bias, if they can correctly identify people, is it something that you see could be a valuable tool for law enforcement, or is it still dangerous?
Well, that's not a question the ACLU should answer. Right now, what we're hearing from communities across the country, over 150,000 people signing petitions asking Amazon to drop this tool, is that this technology is rushing forward without any public debate, without rules to prevent abuse, in a political climate where protesters are being villainized, immigrants are being targeted, and that's just not the time to roll out a dangerous and untested and unproven surveillance technology.
Do you think it's possible for the government to use this in a way at all that is safe?
You know, we've seen again and again with surveillance technology, when it's rushed out without public debate, initial uses to quote unquote, solve crime or to track down criminals quickly slide down into uses that are targeted at Muslim Americans, at immigrants, and people of color. So it's really important before we rush into this new technology that there's an informed public debate about how this could be used and how it could be abused in communities.
That said, take a listen. We had a guest on earlier talking about the government's potential role in AI. Listen to this.
We need a public-private partnership in how we use AI. Again, it's early days in AI, but having said that, the issues like transparency, the explainability of how these algorithms are being used, we need to be a lot clearer about how these companies are using them, and are they respecting the core values of society.
Hemant Taneja of General Catalyst there, Matt. What are the values that we should be talking about? How can we find some sort of resolution on this debate that, in your view, would not violate civil liberties?
Right. So right now what we're seeing is the technology companies' secret algorithms and secret conversations about how to develop these tools are really driving how the tools are used. And we have no idea what these systems actually look like when you open the hood. So I think that person is exactly right, that we need to have a conversation about the values of transparency, about equality, and about anti-bias that need to be built into these tools. Right now, these tools are being built by technology companies who may not have the expertise to know what it means to provide officers with dangerous technology that can make or break split-second decisions about really important public safety issues. So before we hand officers technologies that can actually harm public safety, we should just have a conversation about what is actually happening under the hood.
Part of the problem is, as Lizette Chapman, our Bloomberg tech reporter, has reported, there are still no standards for law enforcement in place here. This is all very much happening in real time. I guess that said, Matt, this seems to be the future. This is where technology is going. Apple uses this technology to unlock every single iPhone. How do we avoid this? It's happening.
It's right. Yeah. Right now is the time to have a debate about what the proper limits should be on this sort of technology. Communities deserve answers before potentially dangerous tools are rolled out on the streets and secret algorithms are relied on. So right now is the time to have a debate. Our elected representatives should have that debate. And if people care about this, they should join the 150,000 consumers that reached out to Amazon and are asking them to take this issue seriously.
California Governor Jerry Brown just signed a sweeping data privacy law which allows consumers to opt out of the sale of their personal information. They can have their data deleted, and they have a right to know what is being collected on them. Big tech not happy about this, but I assume you think this is a step in the right direction.
We actually think that it's a first step, but that this bill does not go far enough to protect Californians' privacy rights. In the wake of the scandal around it's essential that consumers have a robust privacy set of laws that protect them and help them stop future abuses of their data and help them address those actual abuses. We don't think this measure goes far enough to protect those rampant abuses of personal information, and we don't think it goes far enough to provide consumers with the right tools to address those harms. And I think that's an acknowledgement shared across the industry right now.
Matt Cagle of the ACLU, thanks so much for joining us.
Thanks so much.
Coming up, India wasn't even on Netflix's radar a few years ago, and now the company sees the region as key to international growth. We'll discuss whether Netflix can make India a success. Next, this is Bloomberg. Netflix is coming for Europe's TV giants and their viewers. This according to Morgan Stanley analysts who say the TV ad market should accept zero growth as the new normal, as streaming companies like Netflix intensify their push to win new viewers. The note sent shares of European broadcasters tumbling in Friday trade. Netflix has launched an all-out assault on Europe, doubling its programming budget this year to $1 billion. Amazon also has an eye on the continent with 12 original series planned this year, up from just 1 in 2014. Meantime, Netflix is eyeing India for its next 100 million subscribers, according to CEO Reed Hastings. This is a big goal, considering even aggressive analyst forecasts suggest it will reach only 3 million by 2020. So why is Netflix so optimistic about its presence in the country? For more, let's bring in Bloomberg News entertainment reporter Lucas Shaw, who covered this topic in this week's edition of Bloomberg Business Week. Lucas, give us some insight on why Netflix is so hot on the home of Bollywood.
It all has to do with internet, basically. I mean, the business of Netflix is all about kind of trailing the spread of internet all around the world and then delivering people this better TV product than they're getting at home and often cheaper. So what we've seen in India over the past few years is a complete revolution in how many people have access to it, whereas 5 years ago there were like maybe 10 million people who had fixed broadband. You now have as many as 50 million by some estimates, and when you consider mobile broadband, there are now 250 million people who are able to stream different video, because mobile broadband in India is by and large better and more more available. More available. Yeah, more available that. Sorry, go ahead.
So obviously every region has its own preferences. What is Netflix's plan to appeal to viewers in India?
They're making shows. It's the same plan that they have everywhere else. You know, they are rolling out their first drama series next month. It's called Sacred Games. It's based on an epic novel by Vikram Chandra. They have released a few of their own movies there, and they have a lot more coming up. And next year, they're going to release 16 or 17 original pieces of programming for India, which is the fastest ramp up that they've ever had in any country.
Now, the Indian film industry rivals Hollywood in size. Would Netflix potentially be striking some partnerships here? Would they be poaching some talent?
Yeah, Netflix is not so interested in making deals with on Bollywood, which is what is so well known in India. They, at least at the start, are trying to differentiate themselves by going for something different. But they are going to partner with kind of all the biggest players in the region, or at least the talent that wants to work with them. They're looking to convince actors, actresses, filmmakers that making shows for TV is just as good, just as popular, and just as premier as making movies.
So what's pricing going to be like?
Pricing is, at the moment, the equivalent of $7 or $12. It's 500 rupees to 800 rupees. That is a lot more than your average pay TV subscription, which is, $3, $4, $5. It's more in line with some of the really high-end TV. Netflix has countered that its pricing is more similar to kind of a movie. That's true for really high-end movies in the country. It's not true for your local Cineplex. So pricing is definitely one of the biggest hurdles. It's something that Reed Hastings has been asked about. It's something that the executives, most analysts in the region, think that Netflix will have to lower its prices, but Netflix executives have been pretty steadfast that they don't plan to. They have a one-price-fits-all model, more or less, given certain fluctuations in currency, and they don't want to change that.
All right, Bloomberg's Lucas Shaw for us in Hollywood. And finally, the latest unicorn in China's startup arena is up against some stiff competition in a crowded bike-sharing market. Hellobike says it is now valued at about $2.3 billion, and it's ahead of rivals in daily rides. In an exclusive interview, CFO Chen Xiaodong told Bloomberg from Shanghai how his company stacks up against the competition.
We believe that, we definitely surpassed our competition that used to be much bigger than us last year.
Where do you see Hellobike going in the future?
We don't see ourselves as a bike sharing company only. We don't want to be limiting ourselves to do only bike sharing, but bike sharing is a very, very important success factor for us. Once we feel that we have enough user base, we will go vertically upstream to do other segments, which is natural.
The most recent round of financing valued Hellobike at more than $2 billion US. Mm-hmm. And you've talked about this expansion, mm-hmm. which would sound like you would need more fundraising. Do you have any plans in that area?
We're going to be doing that through both the internal generated cash flow and also, once in a while, the external equity financing or even debt financing.
Can you talk a little bit about the internal cash flow? What does it look like directionally?
It's been really healthy. I would say that we were under pressure last year simply because, the market, in the market, somebody somebody much bigger initiated this pricing war. People are more rational. And then, we definitely follow also that sort of trend, basically increasing the prices by a more simple term, right? So that actually helped us greatly, with the top line growth, which has been very strong over the past few months.
Can you describe that? You said over the last couple of months, the top line growth has been very healthy. Can you describe that in any way? Double digit?
Well, definitely over more than double digit. We're mainly working on onshore debt financing solution providers, working with them onshore.
Is an IPO something that's possible in the near future?
First of all, we're going to have to be ready for that. Right? When I say we're going to have to be ready, I mean our market share, our user base, our competitive position, right? Our market share leadership will have to be further solidified to make it happen.
That was Hellobike CFO Chen Xiaodong speaking to Bloomberg's John Liu. And that does it for this edition of Bloomberg Technology. That is all for now. We will see you next week.